They literally put you in a hotel room for an hour. They just pepper you with questions. I didn't know what was going on in the world. Situational question would be like, you're on a bus, you arrest somebody. What do you do? How would you handle that situation?
From cornfields to high rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Corey Sedrel here on the show. Corey, welcome.
Thank you for having me.
I'm excited you're here. Say, for the audience's sake, who are you? Where are you from? What do you do?
My name's Corey Sedrel, and I am a commercial broker at Cushman & Wakefield, Iowa Commercial Advisors here in town. Originally from Grimes, Iowa. Grew up here in grew up in Des Moines. Moved out to Grimes in would have been 1990.
Okay.
Yeah, that's where I started.
I'm sure it looked different in 1990, didn't it?
It did. It was about 2,500 people.
What's it today?
Oh gosh, they're sitting at probably 16,000.
Wow. Yeah. Tremendously different. All right. So you graduate from what? DCG?
Graduated from DCG in 2001.
All right.
So graduated in 01. Was kind of played sports in high school. Did baseball, soccer, football. Was kind of a nerd too. So studied a little bit, but yeah, just played sports and grew up in Grimes. I think I graduated with 97.
Wow.
And that was back in 01.
Yeah.
And then I think there's probably 225 to 250 in the class now.
Yeah. Significantly different. So you graduated, and then what'd you do?
So I graduated in 01. I ended up going to Central College in Pella. Played football there for 3 years.
Okay.
I attempted to play.
Yeah.
I was more like a JV All-American. What I say, my sophomore year, I tore ligaments in my ankle. So I sat out that year. Played my junior year, and then just said, this isn't going anywhere, and took my senior year off and had a little bit of fun. So that was good. Played rugby as well while I was there, but while I was at Central, I studied accounting and computer science, so accounting information systems.
Which sport's more dangerous, football or rugby?
I would say rugby.
Oh, really?
So
Okay. Yeah.
I remember the first time that it was the first game we were playing, and I went to tackle a guy, and he was coming down the sideline, and I hit him as hard as I possibly could. And I just remember, like, that instant, everything in my right side went numb. Like, I got up and couldn't feel anything. I'm like, what in the world just happened? Well, there's a difference when you tackle somebody with no pads and you tackle somebody with pads, and you learn very quickly to wrestle people to the ground. You don't full out tackle them like you do in football.
Yeah. So Central, you graduate with an accounting degree, and then where do you go from there?
I was accounting computer science. So the idea behind that was 2001 was my freshman year of college. That's when Enron hit, right?
Yeah.
So the whole blow up with Enron and the scandal. Then you had the Twin Towers go down. And I was always interested in federal law enforcement, actually. So at the time, the FBI wanted, computer nerds, and they wanted guys that could do accounting.
Right.
So I did accounting, computer science, and that was kind of my main focus. So the whole idea was do accounting, computer science, and, basically get a shot at work for the FBI.
Cool. And where'd that take you?
So after I graduated, I ended up starting at Principal Real Estate Investors, Principal Financial Group. Remember, I graduated on Sunday at 2:00 in the afternoon. I reported to work at 8 a.m. the next day. That was probably the day that I had an epiphany where I walked in, and that was back when everything was cubicles, right? So there was no work from home. Yeah, we had BlackBerries, but you were there, grinding away from, 8 to 5 at least every day.
Sure.
So showed up at work, get to my desk, and 2 hours later, I'm going, oh my gosh, this is the next 30 years. I'm like, this is interesting. I don't know if this is me, but long story short, I got the opportunity to spend 2 years on the debt side. So doing institutional debt lending as an analyst. And then I switched over to asset management, and I was investment analyst doing financial analyst or analyst work on the asset management side. And in between there, I actually was trying to pursue going into the FBI.
No, so that's why I was going to bring it back to that because as a non-educated person relative to how one even gets in the FBI. So walk me through what that is and why didn't you just go from college to the FBI, or there has to be a process?
Right. So at the time, and I don't know what the process is now, but I'm
Mm.
sure it is, similar. So there's, I don't know, call it 8 to 10 steps to get in the FBI. You got to apply. You got to go onto the field. At the time, it was Omaha, which it still might be. You go on to Omaha to that field office, meet with the individual who does the hiring or starts the hiring process. Meet with them, fill out an application, go through a few steps, and then they invite you down to at the time, and they literally put you in a hotel room. So you fly down to Dallas. There was probably, I don't know, 40 or 50 other candidates at the time. Put you in a room, hotel room. You walk in, and I was 23, 24 at the time. And for an hour, they just pepper you with questions. And I was 23, 24. I didn't know what was going on in the world.
Yeah.
And,
What kind of questions? Give me an example.
so situational questions and biographical questions. Situational question would be like, all right, you're on a bus, you arrest somebody, there's drugs in their pocket, you see your partner take those drugs, put it in his pocket, what do you do? How would you handle that
Yeah.
situation? That'd be situational. Biographical was like, well, tell me a time that a customer had a disagreement or disagreed with you, and they want to fight with you. How would you handle it? Like, how did you talk them down, or how did you handle that situation? I'm 23, 24, and I'm working in the corporate world.
Yeah.
So long story short, I did not make it past that round. Well, the interesting thing, if I would have made it past that round, I would have been offered a conditional letter of employment and would have gone. I had to still go through the physical test, but had I passed that, life probably would have been a little bit different. Looking back now, I'm pretty happy that actually I didn't go down that path,
Yeah.
because I've been able to do a lot of different things and create a little bit of freedom for
Yeah.
myself outside of, punch the clock for the
What had you choose not to do it again, and not to reapply at some point,
So,
not to reply today?
so you can reapply once, and I think you have to be 36
Okay.
before your 36th birthday, because I think you age out at 56,
Mm.
and I think it's 20 years,
Yep.
and you got to be able to get a full retirement.
Okay.
So the interesting thing is, fast forward 10 years, I'm 33, 34, 35, the time I was running a landscaping business. And I'm like, you know what? It'd be kind of fun. And I had no desire at that point to try to become an FBI agent.
Yeah.
I'm like, it'd be kind of fun just to literally reapply, go sit in the interview again if I could, and I'd probably do a whole lot better.
Sure.
Right?
More life experience. Yeah.
Got more
Naturally.
life
Yeah.
experience, BS, and just go for the experience.
Yeah.
But that did not happen. And interestingly enough, I also applied for the DA back after the FBI, and I got down to Missouri, St. Louis. And in that interview process, basically, they sit you in a room at the time, play a video, and then you literally you watch call it a 10-minute video, and then you got to give basically a rundown of everything that happened in the video and what's going on, which was actually more difficult than the FBI.
You didn't work this hard to earn next to nothing on your money. Savings accounts barely move the needle. Tech stocks, AI stocks, it kind of feels like Vegas out there right now. Rentals, too oftentimes it means tenants, toilets, termites, and not the cash flow you were thinking. Well, so I've got an alternative. Little Guy Loans Co-Lending Fund. Qualified accredited investors are earning 10 to 11% annual passive returns. It's paid quarterly by co-lending with us alongside me on short-term first lien real estate loans right here in the greater Des Moines area. Your money's backed by a real property, not promises. It stays close to home. We've successfully funded well over $10 million in loans right here in central Iowa. So if you want steady income without headaches, click the link below in the show notes. Let's connect. We'll see if it's a fit for you.
Long story short, what happened was 2009, the world fell apart, right? So there were 5 rounds of layoffs at Principal that started probably early 2008. And at the time I was doing asset management, when everything, basically fell apart, one, the government froze all hiring. And then 2, I got laid off from my job. Would have been, I think it was April 9th. So things got interesting for me in 2009. So I started 2009 corporate job, Principal, married, in the house in West Des Moines, dog, cat, kind of the whole, whole 9 yards.
Yep.
April, long story short, February, things kind of changed my marriage. And April, I remember the date. It was like April 4th. I went down. I literally walked from my office down the courthouse, filed for divorce. Then April 9th, so 5 days later, I got laid off from principal.
Yeah.
So I'm sitting there going through divorce, lost my job. And I'm like, I Princil's an amazing company, and I've still got friends there that I started with that are still there, and I learned a ton. I wouldn't be sitting here today if it wasn't for that experience. But what I will tell you is it was like, all right, I'm now at the bottom. There's nowhere to go up. I didn't want to go back to the corporate world. And when I was at Principal, what we were doing when I was on the debt side, right, I'm lending money out to investors across the United States. And then on the asset management side, we're buying properties for portfolios. Well, when I started at Principal, I was the analyst, so I was getting people's balance sheets, and we had partners that were, for whatever reason, I remember this specifically. We had two partners that were trying to buy a Walgreens or a shopping center. One net worth was 142 million, the other one was like 143. And I'm like, these guys, I'm looking at their balance sheet, I'm looking at what they're buying, I'm looking at the cash flow, going, I mean, this is passive income, right? And that was when I think Rich Dad Poor Dad came out.
Sure.
So the wheels kind of got spinning. I kind of had the thought, I'm like, well, why aren't some of these guys at Principal wanting to be the guys that are calling up Principal in 10 years saying, hey, I'm looking to buy the shopping center? Principal was really kind of the catalyst for me to kind of open my eyes and say, okay, well, there's more than just punching the clock. And, my family, my dad worked for the Wendy's franchisor here in Des Moines for 37 years. I didn't go to college. My mom as well. She worked for Principal for a very long time. But anyways, long story short, I was like, I just don't think that's the path. So sitting there in 2009, going through divorce, I know I got to sell the house, and I'm without a job, right? So I love being outdoors, and I've got I've got some ADD, so sitting at a desk for that long was not a thing for me. So I had, during 2007, 2008, got a snowblower, threw some flyers out in the neighborhood, started doing some snowblowing in the neighborhood, and I lost my job and said, all right, well, I'm going to, try to grow this thing. I had no experience in landscaping, and I was young and very naive, very, the world's your oyster, right?
That's right.
And you'll do anything. Started that with literally a snowblower in the back of my S10 Blazer at the time. So I remember there was a there was a blizzard. I can't remember, 0809. But anyways, long story short, so I have this Aaron snowblower, and I've got Rams, and I've got it in the back. I'm driving it into the back of an S10 Blazer with the gate down, and I've got it strapped down, and I'm going down the interstate like 70 miles an hour. It's like the snow's coming in the truck. I'm like, oh, this is great. I'm making this business work. And long story short, 2009 was the year that we got, I think it was like 61 or 62 inches. And I think we did almost 500 driveway removals that winter started with one snowblower, then I got two, but, yeah. And that's how it all started. Started doing landscape. Yeah. Yeah. I mean, the vision was always, to, grow it as a passive investment, right?
Sure.
So when you went from Principal Financial Group to out mowing lawns, people are like, what in the world are you doing? Like, you're nuts. Like, why don't you just go get a regular job? And for me, like, yes, I love being outside. I enjoy, the equipment side of it. And again, I went from married, so now I'm single. I don't have any kids. I kind of have complete freedom. And that's really what, allowed me to kickstart the landscaping business.
Started with snow, and where to go from there?
Started with snow, then we got into townhomes. So we were doing townhomes, and we got into commercial. And I always kept it really simple and never did hardscapes.
Yeah. Townhomes being the HOA maintenance?
Yes. Townhomes, HOA maintenance, commercial, office, retail, any of that.
All the exterior
residential.
stuff relative to landscaping, but not the hardscape.
Anything maintenance, no hardscapes. And my approach was always basically rinse and repeat, right? Because I was trying to work myself out of that, which I did. I ended up, interestingly enough, I went full time in '09. In 2012, 2013, I bought the Grounds Guys at Des Moines. It was a franchise at the time.
Okay.
Got sold, hook, line, and sinker. What I thought I thought I was buying a Cadillac. I think I was probably delivered a Kia with missing wheels. Is my analogy. And it was a really good experience, but I learned quickly that I guess what I thought I was getting wasn't so at the time. And I ended up negotiating out of that contract and going back to Titan Lawn and Landscape, which I still technically have to this day.
Did you get yourself to a spot where you're actually out of that from a day-to-day standpoint?
Yes.
Yeah. When
So
did that happen?
so back in, call it 2017,
Yeah.
2018, I'd been doing the landscaping business. It started at 10 years prior. And the goal was always like, hey, I want to turn this into a passive investment
Right.
and ultimate, freedom. I love to work,
Yeah.
but at the same time, I like to work on what I like to work on. Anyways, in 2017, 2018, I'd been through the franchise. I was kind of getting burned out. Labor was very hard to find. It was constant turnover. Long story short, I was sitting there. I was like, well, it's like I know commercial real estate a little bit from my days at Principal.
Right.
Never been in brokerage, but I'm like, I'll just go get my real estate license and go start selling commercial real estate. So when got my license, and I was fortunate enough, and you know this, commercial brokerage is very tough to get into. And the first 2 or 3 years are just you're drinking from a fire hose, right?
It's tough to get into and call it the cash conversion cycle. I mean, from the day you get in to the day you put something under contract to the day you get paid, that can take a while. So unlike residential where it can happen in literally 3 weeks, commercial is not the case.
Yeah, I mean your average sales cycle in commercial. I mean the fastest you're going to get something done is 60 to 90 days, and that
Mhm.
might be 10% of transactions,
Right.
maybe 5%.
Right.
Most of the time, from the time you start a conversation to the time, something closes, it can be 6 months to 6 years. You just never know. So
Right.
the cycle is much longer. But when I got in, I got an opportunity at Capstone Commercial, which is now Toggle Space, and started there and was fortunate enough to learn the ropes. I do remember, I think it was, my first couple weeks, I'd been on a tour or whatnot. Anyways, Jeremy Spillman at the time, I come back from a tour and he's like, all right. He's like, well, put together an LOI. And I'm like, LOI? He's like, here's the template. And I'm like, okay, all right, this is what we're doing. All right, I suppose. And honestly, it was, trial by fire, which is, I think, is the best way to learn. I was fortunate enough that I had experience at Principal, that I knew the very basics of
Sure.
commercial real
Yeah.
estate and kind of how it worked. Yeah, with commercial real estate, again, the cycle's just long, but I was fortunate enough to hold on to my landscaping business, and that was able to provide some income, right, while
Sure.
I ramped up on the commercial real estate side. So I spent from 2019 to about spring of 2024 at Capstone, now Toggle Space. And then got the opportunity to move over to Cushman Wakefield. I have a commercial advisors at Kurt Mom Shop, which has been a great experience. It's been fun working with the guys and getting some opportunities there at just a bigger national shop.
Yeah. What were what were you doing that was different between the two brokerages, or was it the same?
I think it was the same.
Same tells.
Yeah, I would say the difference between, being at a smaller boutique firm
Mm.
and then being at a national firm. And now the beauty of our office, our Cushman Wakefield, or I have a commercial advisor's office, is the fact we're not corporate, we're an alliance
Right. Remember. Yeah.
office. I'm not a corporate employee of Cushman Wakefield. I'm a 1099, and we are kind of owned and operated solely by current Mom and I's partner,
Right.
and which gives us a little bit of flexibility and freedom. I don't think corporate's ever, breathing down our back. But with that said, the difference really is, going from a small boutique shop to the shop I'm at now. We have 11 or 12 brokers. We've got 8 to 9 that sit in the Des Moines office. We have a few that sit in the Cedar Rapids office. And really, the beauty of the shop that I'm at now is activity breeds activity, right? So
That's right.
when you're in a shop with 8 to 9 guys and they're all hustling and you're seeing guys knocking down big deals, it's highly motivating, right? So it's competitive, but we're all happy for the guy that gets the big win. We're a little bit unique in that we are all independent. There is one team in the office, but I get the opportunity to work with just about anything anybody in the office, right? So if I get a deal that's industrial, I've got my team members there. If I've
Yeah.
got some
Yeah.
that's office retail, it just kind of depends on the deal.
What have you learned over the years from investors who get it right? They do really, really well, consistent deal after deal, and those who really strike out as they go. What are those who get it right? What do they have in common?
I think what I see the biggest difference in investors and the ones that get it right and the ones that, falter a little bit, I think one, it's understanding the market. And I think it's understanding numbers. And I've seen guys when things are good, right? You can cowboy deals and, you can get lucky sometimes. And, but what I've seen recently with the market turning is some of those deals and it's in the news. I mean, there's properties that are going back to banks.
Right.
I just recently heard this week that there's a few multifamily deals that are going back. There's some land development deals that have been blowing up. And what I would say to that is, I come from, Principal Financial Group where cash flow is king, right? And development is obviously risky. Buying and holding land, especially if there's very little, if any, cash flow on it, and then also buying, vacant properties and trying to get them leased up. But I think the guys that I see do really well, they understand the market, they understand cash flow, they understand return, and then they also understand how to get value out of those properties. So, you're an investor,
Right.
right? And you and I could have probably a 3-minute conversation about a property and figure out whether or not it makes sense, right? Hey, this property is here's the cap rate, here's what they're asking, below market rents. In 3 years, I think we can take it from say 550 a square foot to 650 a square foot. We can cap out at 7.5, 8%. Here's your exit. And if you understand the market and your broker, or if you're not even working with a broker, so you have to work with a broker. But if you understand that math and how to squeeze NOI,
Yep.
right?
Yep.
So it's all about NOI growth and cap rate compression. And that's really how you make your money.
Yeah.
On the expense side, right? Managing the expenses of the property. And what we've done recently and where we're seeing opportunities in the market right now, or what I've seen the last year is, if you can find a property that's older, that's been in a family for
Mm.
there's some properties in the older parts of Des Moines that have been in, families for 30, 40, 50 years.
Right.
And those families have done a great job of managing them and have built really good relationships with the tenants. And, you start getting in the second generation, the third generation, people start getting older and like, maybe it's time to exit. And every once in a while you'll come across a deal where, one, they're asking a reasonable cap rate going in, but two, you're being able to see where, it's a retail strip center. It's all on gross or modified gross leases. One, they're well below market. And you start looking at that and going, okay, well, and the tenancy is long, right? So if you can get your hands on something like that, and you understand, okay, here's where the market is, here's how we restructure. There's been a couple deals that I've been able to work recently where we've been taking tenants at call it $10, $11 a square foot gross, and they're retail and they're small retail
Yeah.
spaces. And as those tenants roll, we're flipping them to 1250 triple net,
Mm.
right? And when we're going through that exercise, what I try to do is at the end of the day say, hey, you know, to my landlord or my client and saying, well, here's the value we just created on this lease. Like here's the upside.
Right.
Maybe a small 1,300 square foot, space, but you can create $60,000 in value
That's right.
by bumping those rents.
That's right.
So,
Do that at scale across the retail complex. Adds up.
yes, absolutely. And it takes time,
Yeah.
right? It's not overnight.
Right.
And, you can't, not all properties are like that, but if you can find those and be
Yeah.
patient and understand that, I think those are the guys that are constantly, moving and shaking and making things happen. The other thing I would say is just organization. A lot of entrepreneurs, run kind of, deal with what's on fire at the time. If it's not on fire, they just kind of don't deal with it.
Mm.
I'm guilty of it. Like, I'm sure you get it,
Or they
right?
create
Like,
their own, or they create their own fire. My experience is most entrepreneurs, they're firefighters, but they're also the arsonist.
110%,
Yeah.
right?
Yeah.
Like, yeah, exactly. So, yeah, the guys that are well versed in the market, they understand numbers and, they can make decisions because there's a lot of people, and I get it, that come into commercial real estate and I want to get in or I want to do this or I want to do that. And you're doing this hem haw for 3 years. And at some point you're like, well, maybe I should just buy the property for you and I'll just rent it back to you because you look so much, you're like, well, this makes a lot of sense, pull the trigger. And if you can, that opens up opportunities, right? If every once in a while somebody wants a building, they can't afford it, you can go in and find an investor, pitch it to them and rent it back.
Yeah.
So I would say that, and then also just being creative and understanding debt and how debt works. I think that is very, very important to investor success, right? So understanding debt service coverage ratios, being able to talk to the banks, interest rates.
If you're a house flipper, execute the burst strategy or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
What did you learn from your days at Principal working on the debt side that you've applied to what you do, either personally investing or to those clients you advise?
So my days at Principal, I call it analysis paralysis, right? It was a great experience. I just literally sat and stared at spreadsheets all day long, right? Like, what's our break even? How does this cash flow? So obviously, when I was on the debt side,
Yeah.
I think the smallest loan that we would work on was $5 million, and the biggest was 95 million. So think about $95 million back in 2005. What,
Right.
21 years ago? Like, it'd be a big loan. It was a big loan back then. It's a
Yeah.
big loan today.
Yeah.
I don't know if that'd be 200 million today.
Right.
But anyways, what I learned and it probably makes me good at looking at investments. Sometimes it makes me a little bit, more conservative when I'm working with my clients. Is understanding downside, right, and how debt affects the property. We just went through a period of what you could get 3-4% money, and a lot of that money came in. Right, you had a lot of out-of-state buyers where cap rates were just ridiculously low on the East Coast and the West
Right.
Coast, and you had a lot of out-of-state buyers come into the multifamily market, and I've seen it buy Class B, Class C, and Class A property and be sold on, the upside and the market rents and everything like
Right.
that. And you give guys that's, we're at cheap money, but it's cheap for the next, 5 years, and 5 years is going to come fast.
Yes.
And if we don't either A, buy down debt, increase value so we can pull out more cash, if there's a major reset, which we're going through right now, there's going to be, some conversations with the bank where either, we're going to have to come up with cash, um, or have to refinance, or we may just have to sell this thing,
Right.
if we don't have the cash to pump into it.
Right.
So kind of understanding how that debt analysis works, and then, working it backwards, right? So when I look at a deal, I'll look at, how much cash do we have to put in, right? If you're
Sure.
come to me and you're like, Corey, I want to buy this property. Okay, let's underwrite it. What do you have for cash? What does debt service coverage look like? You're capped at, probably 1.25 historically on the debt service coverage side. Some guys will go, 1.15, maybe 1.1.
Yeah.
But there's got to be a
Better be
pretty
better be a killer tenant.
there better be a very strong upside story or a short-term cash flow blip,
That's right.
to get that done. Yeah, the days of Principal were very, very helpful when, looking at properties and underwriting from just an investment analysis standpoint.
2026. What are you most excited about?
2026. So the market feels pretty good right now.
Yeah.
Activity's good. I feel like the Nationals, I think I've got 5 or 6 deals that are going on with national groups, retail, industrial.
But
They're expanding or buying or building. So one of them's retail. They're in 11,000 square foot. They're gonna expand into 16. Another one's industrial.
Yeah.
They're looking at expanding from called 150 to add another 20,000 square feet. So that's retail. That's industrial. The small bay retail, the stuff that I've been talking about, the smaller retail,
Yeah.
smaller office is doing really well. I've been doing a lot of renewals where last year when we were working on renewals, people are like, "Hey, I want to stay. I'm a little jittery about where things are at, with the economy. Can I renew for a year or two?" Right. And, the approach with that client has been, let's just keep them in the center. And he just recently bought the one center. He's had the other one for a while. But with that said, he's like, hey, let's just not rock the boat. And, they're under market. And he's more like, hey, let's just, the property cash flow's fine, right?
sure.
So I'm like, well, if they're under market, that's fine. Let's push them out a year or two. And if they decide to leave, then we've got the upside there.
Right.
But I know a lot of businesses are pinched. I know that contractors in general, I've heard, it's kind of the tale of two stories. Either, excuse me, contractors are doing really well or not. And there's not a whole lot in between. I think the brokerage world last year in 2025 was like that, right? So you had brokers who
Yes.
were having their best year and you had brokers that had their worst year.
Right.
And there was really nobody very few in between.
Yeah.
Right? And a lot of that, in the brokerage world and kind of the assets you're working on and the clients you're working with,
Right.
right? But I feel pretty good. The industrial market, we've got quite a bit of vacancy to chew up. So our market is about 76 million square feet. That excludes cold storage, excludes the data centers. But, specifically because I track the industrial market pretty close. We've seen vacancy go from 2.5%, 2.7 in 2022 all the way up to 7.5% at the end of last year. Net absorption was not great last year. We ended at about 240,000 square feet of net absorption. Historically, pre-COVID, we were 350 to
Wow.
500,000. 22, 23, 24, we're at 500, 750 to 1.5 million. The industrial market's still sitting on 3 million plus of brand new first generation space that's been sitting anywhere from 2 to 3 years vacant. So it's going to take some time. I think what we're going back to, and just from a fundamental standpoint, is essentially we're going back to pre-COVID levels, right?
Yeah.
So the industrial market specifically, and I think the retail market as well during COVID, I mean, it was just go as fast as you possibly could, right? I
Sure.
remember a property that it was spec and we leased it up right as it was getting done with construction. And I remember I had a tenant that was so excited to get in that literally I met with the fire marshal, opened the door, he checked everything out. He walked down, he's like, "You're good to go." And I literally just handed the key to the tenant and he was off to the races.
Yeah.
So that small bay product was flying off the
Right.
handle. Big bay warehouse was too. It was going quick. And then now it's just settled down to a more normal market. So the challenging part for me is I came in October 2019 and then COVID hit.
Right.
I didn't know what was normal.
Right.
COVID's my normal.
Yeah.
Right. So
Right.
I'm like, the world's falling apart. This thing's slowing down. And then you
Right.
look at the numbers and you're like, it's not, I wouldn't call it a downturn or a economic collapse or anything like that. It's just we're
Yeah.
going back to
Yeah.
norm.
Mean reversion.
Yeah. There you go.
Sure. Yeah. Yeah. Corey, ready for the final three questions? If you had one piece of advice for your 20-year-old self, what would it be?
Ooh. Do a little bit better planning. So I would say that I have done a really good job of just working and hustling and grinding like most entrepreneurs. But, I spent that first 10 years in landscaping and built a business and it's still there and I've got assets there. But I think I was just running so hard and so fast and just like being the guy that's just cowboying everything that if I took a look back, I'd be like, man, I really wish I would have gotten into real estate like
Sooner.
earlier, but you
Yeah.
can't play, hindsight's always 2020,
Sure.
right? Like I probably wouldn't be where I'm at today in real estate
Right.
had I not had the experience of, the landscaping business, which I still have today. So it's still panning out.
Yeah. Two books that changed your life.
Ooh, the one that really changed my life was Rich Dad Poor Dad. So I know there's a lot of people that would probably say the same thing. I read that at the time that I was at principal and kind of unhappy with what the next maybe 30 years looked like. And it was a mentality shift for me instead of going from, I'm trading my time for money and trying to trade money for time. The interesting thing is my whole mantra has been like, hey, I want freedom. I want complete freedom. And I work a ton. I love to work. I get bored really easily, but you know, I have the freedom to choose what I work on most days, not all days.
Right.
But it's been a really cool journey, and really that book alone, I would say, was kind of the mental catalyst for me.
If you were cast away on an island for a year, you could only get three pieces of data about your business each and every month. What three things must you know every month to know how your business is running?
I would say the first thing I want to know on the landscaping business is gross margin, right? Because if I know what my fixed expenses are going to
Right.
be for the year, right? So I pretty much know what rent, insurance, everything that occurs from an expense standpoint, whether we go out and work or we don't,
Yeah.
I know those expenses and then I price everything off gross margin. So if I know, for every $100,000 I do in gross revenue, if I know the gross profit, I can literally tell you within 30 seconds whether we're doing well or we're not doing well.
Right.
You said 3, right?
Yeah.
The other two, what I would tell you in I guess flipping back to the commercial real estate side, it's kind of commercial real estate brokerage is hard to gauge, right? So, deals come and go. I think for me, understanding, the data points, again, we go back to just, the basic data points of the market. If you're tracking industrial, if you're tracking retail, if you're tracking banking, right? Like where interest rates, where's vacancy, where's absorption, who's moving, who's doing what. And, there's those data points that if you know those data points and you track it long enough, you get a decent feel of the market. Because as much as I do is I can sit here and be like, wow, I feel like the market's great. And I feel like it's awesome.
Right.
Okay. Well, you can feel one thing,
Right.
but the data doesn't lie. If you got the data points to back it up, I'm like, oh, I feel like the market's great and vacancy's coming down and rates are going up. And yeah, okay, that's good. But everybody's experience is different too,
That's right.
because, different asset classes are performing
Very
completely
differently.
differently
That's
of
right.
each other.
That's right. Absolutely right. Corey, I've asked lots of questions. What's one question I did not ask that I should have asked?
Well, that's a good question. I don't know. Throw a random one at me.
Throw a random one
Off the
at me.
wall.
Yeah. What's your least favorite asset class and why?
Least favorite asset class. I would say office. And it's not because of necessarily the office market, how it's performed from COVID. It's probably because I've never been big about sitting in an office, right? So I can walk into when I walk into a big warehouse or manufacturing facility or small flex space industrial, every space is unique, right?
Yeah.
So you're like, gosh, what can we do here? What's access look like? Is there outdoor storage? There's a lot of moving pieces to it, but being in the contracting world, I can visualize it. I can see it. I start thinking about myself, right? And then, if
You
I
can relate.
I can relate. Retail, I like retail from an investment standpoint. It's fairly easy to underwrite. It's been doing fairly well.
Right.
And depending on who you're working with, it's a fairly easy asset class. Office, I've done office deals. I've got, I'm out in the market looking for some tenants for some office, but I don't walk into a 50,000 square foot office space and go, man, this is exciting,
Yeah.
right? It's just it hasn't really done it for me, and that's probably what I would leave it at. I like multifamily. Multifamily's interesting. I've had the chance to invest some single family over the last year, and that's been good. But I think for me, I've always been somebody that really only does things that excite me. If you're going to be an entrepreneur and you're going to bang your head up against the wall day in, day out, you got to love what you do. And you got to get excited about it, and it's kind of why the office market just does not excite me.
Doesn't do it. Yeah, I can appreciate that. See, it's been a great conversation. I appreciate you taking the time to connect. For people they want to find you, follow you, connect with you, where can they go? What should they do?
So I'm on LinkedIn, obviously, and I can reach on my cell phone at 515-979-1454. My email address is then Sedrel, Sedrel at iowaca.com.
Perfect. We'll put all the links and all the details below in the show notes for everybody. Corey, appreciate you being here.
Thank you.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.